All right, welcome to another episode from the Chart Reader. So we'll cover the weed sector today, and it feels like this was the first good day since that November no vote in Florida, right? We saw a lot of different sectors pop post elections. You can see it basically from the fifth onward, TLRY, and kind of the same with the rest, right? But today was a big day, very much led by ACB. Look at that lovely earnings reaction. Look at that monster volume, right? There was also a very interesting meeting today, okay? Give me one sec. This right here. So there was a Senate Banking Committee hearing on debanking, okay, focusing a lot on this sector. And there was a real good breakdown. That's actually a big reason why he just became a golden onion right now, too. But from reading it, and feel free to pause and just read it yourself, there was nothing wildly good. Nothing was bad. Nothing was bad by any means, right? But I think we just needed a little bit more good here, because I don't know if ACB by itself is going to be earning strength to carry the sector. I hope that makes sense to you, okay? What is coming up is CGC's earnings, okay? You can see when I was looking at that TLRY chart, my kitties, what are you doing? Come on, I know you want attention. I got to give my people attention. So you can see Tilray already had the earnings right there. That was the earnings per share right there. CGC hasn't had it yet, and if I saw correctly, it's on the 7th, if I'm not mistaken. So CGC good earnings might be enough to carry the others, all right? And I think that's one big difference between the two of them, being CGC and ACB, all right? So those are the two things I'm looking for. The last kind of just general open thought. Look, I know a lot of people have been asking, what's Trump going to do? What's Trump going to do? What's Trump going to do? Look, I still think Trump is going to do something good for this sector. I just don't think it's going to be an immediate focus, all right? And you got to remember, whether you like him or not, that's not what this video is about by any means, right? We're not here to talk about politics. But the guy's here for 4 years. Okay, I remember saying it in the Discord comments, and I'm not going to go search for it because it was a while, but I don't think Trump's going to do anything big in this first year. Okay, look, I don't think weed in any way, shape, or form is important enough for the first 25% of his presidency, but there's still 3 years left behind it. There's still 75% more of the term, right? And I could see it being a later term focus than a beginning one. You know what I mean? So, just again, my general thoughts. There's obviously no facts behind it. That's just the opinions of some dude talking, right? But I think what I'm really looking for is CGC earnings. I'll give you a couple extra thoughts on that shortly, but ACB was good. It's not on the same level as CGC, right? And when I say level, I really mean volume, right? So if CGC can do good earnings, hey, maybe that will lift the rest, all right? So I think that's some pretty decent thoughts. I guess the last thing I'll do before we get into it, let's just look at the Dow Jones. Again, when I'm looking at this sector, to me, I really care the most about the Dow Jones, all right? We're literally talking about farming. We're literally talking about selling things in a store. Nothing is online or e-commerce, right? So as long as the Dow Jones is looking good, that should be a good thing for the sector. We've seen a lot of disjointment, you know that, but hey, that doesn't mean we're not going to look and still set expectations, right? So Dow Jones is looking good on the daily. My cat's trying to leave. Are you ready to leave here? All right. She doesn't want to hear the charts. Let's get you out of here. So Dow Jones is still looking good. I think I'll take that. But again, we've seen a little bit of disjointment. So I think that's pretty good on the opening thoughts right here. So before we do go any further and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at sorry, it's been a while. We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel, share this video online, comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms, but for real, just being here, giving me your time, oh, I'm so grateful for it, all right? So let's get into it. I think I'm gonna chapter a couple of the tickers in this first one, all right? And like I said in the opening thoughts, to me, there were two very big things that happened today. Number one was ACB. All right, ACB 68, almost 70 million shares was a big number. Yesterday, we only had, you can see it near the bottom of that box, volume was 1.1 million. We nearly 70x'd volume from yesterday. All right, you always hear me say volume is king, volume is queen for the ladies watching this, and this is what volume can do on top of what was good news, right? The good news was all on the fundamental side, and it was earnings. Truth be told, I didn't see what the earnings specifics were, but hey, when you're gonna gap up over 3 moving averages, break the 4th one, and actually wick over the 5th one, I can say earnings was pretty good. You know what I mean? It's far less important what you and me think as regular people. It's way more important what the market thinks, right? So that's a good market reaction. Two very important things, right? Number one, this needs to hold. All right. Number two, volume needs to hold. All right. Again, I'm not talking about ACB just yet. I will shortly, but what mattered here as we're looking at TLRY, as we're looking at CGC and a couple others, was how they reacted. Okay, this very nicely gaps up, very nicely gets over the 8. It's actually able to wick the 20, comes back down a lot. You know, I'm never a good. I don't like big wicks up. I don't like big wicks down. I always call them odd or interesting, right? But it's an interesting run. Just couldn't close as beautifully as I would have liked. But hey, that's not that bad, especially because there was absolutely nothing about TLRY today, and their earnings already passed, right? So it's not like we have something to look forward there, right? When I look at CGC, I see the exact same thing, right? We gap up from the excitement. We do our very best to run to the 50 moving average. I'm going to kind of ignore my death line. I give more respect to the moving averages. You know that, right? But we do our best to go up. I think the one positive to say is the body on CGC was a little bit better than TLRY, right? I think TLRY, we wicked so much and lost so much as opposed to CGC, you know? And another thing to just kind of note is the spacing between the moving averages. You can see it's to there, and then the next one's to there, as opposed to CGC. Man, once we got over that 20, there was just a lot of room to get to the 50 on top of a lot of red, green, you know what I mean? So there was reason to see it, to think it, and yeah, it did the job in a lot of ways. I think just kind of echoing the same comment, what do you call it? It just, I wish it closed a little better, but hey, at least a little bit better than TLRY. Sticking with CGC, so we have earnings coming up, and it was the last thing we talked about on the Discord before I left. Look, there were again, we're just here giving educated opinions, right? But where was it, James? Where are you? Here we go. So I personally can't imagine their earnings, their being CGC, being good. Okay, I think being positive is the word here. I use the word good. So to me, good doesn't always have to be great. All right, if we're expecting bad and it happens to do just a little bit better than bad, hey, that can be good, right? All you got to do is beat expectations. I don't know what the last earnings was. Let me just kind of zoom out real quick. It looks like it was right here, and the reaction to it wasn't fantastic. Looks like the last one right here, earnings. So coming off the last 2 earnings, they haven't had a very good reaction and hold. Even that one wasn't that good. Honestly, even that one. So look, sometimes a company can turn it around, right? But I'm never a big fan of knowing that the last couple weren't good. I'd much rather the last couple be good and have just that little more confidence, right? But I think the big point is, if CGC's earnings can do well, I think that will have a better chance of rising the other sectors as well, right? Sector strength is an important thing. ACB just doesn't have that power that CGC would if it could, right? So again, to me, they all just moved around their respected moving averages. What I'm basically looking for, let's go back to Tilray. Can we actually hold that? Can we actually make a move all the way up to 111? That would kind of be my next expectation. And then that 116, I think, is good to go for the next one. Or are we going to come back down to like 105, 104? Right? I think if we start to come into 104 on Tilray, I would start to get a little worried because all of a sudden I'm thinking to myself, look, we just got over the 8 and then failed. We just got over the 8 and failed, right? That's not what I want to see. I want to see us make our way up, make our way up, make our way up, right? So with CGC, essentially the same thoughts, just different lines, right? Are we going to make our way down to like 240, maybe even all the way down back to the 20, around 225? Or can we continue the climb, right? That should have been where we closed, in all honesty. I would have loved to seen this close a little closer to 270. But hey, look, maybe we go after that 270 tomorrow and then hopefully get over that and then make our way up. My other cat is now at the door. Let me let her in real quick. What are you doing? I hear you. You're so loud. You know, I had a friend ask me if the cat thing is a gimmick. It is not a gimmick. The cats run the house, then my wife, then me. So I know my pecking order, all right? But look, Tilray and CGC, I think today was exciting. And I think we see it on these two charts, mainly because nothing had to do with any of these, right? But nice little banking hearing, nice little earnings from one of the bigger names in the sector. Hey, that's enough to get us excited. Let's follow it up with this one. I think is the big goal. Otherwise, like I just said, we're either going to lose the moving averages we gained, or hey, we'll start creeping our way up. All right. I didn't talk about the death lines too much. You can see CGC and Tilray, they're both under them still, right? That red line. I think that's going to be an interesting resistance. I think at the moment they're lining up to moving averages. So I normally say I respect those more, but as hard as it to break a golden line up, that death line recovery isn't as easy, all right? So normally I would start deleting lines when they line up this well with moving averages, but I think I'm going to keep this one. I'm going to end up deleting this one. And I think I'll keep this one for now until that gets closer. On Tilray, really same thing. I'm not going to delete this one, all right? I am actually going to delete this 116. I know I just referenced it, but I think at that point we'll just use the actual 20 moving average itself. I'm going to keep this one and I'm going to delete this one because that at that point is the 20 moving average. The 200 moving average, right? So I think it's always good to delete the manual lines that we draw. It kind of keeps things a little clean and you can see my logic behind those. So I thought I was going to throw a couple other tickers on this one, but I think this is a pretty good chapter right here. Let me know your thoughts. Let me know your opinions, even if you disagree. Truth be told, I don't know what SNDL and MSOS look like. Oh, nice. I probably could have kept the chapters together, but I'm seeing the same thoughts that I just said on SNDL. I'm seeing the same thoughts that on MSOS as well. So really, I probably could have chaptered it. But hey, for people that care about these two more than the last two, it actually might end up being a good thing. But look, I think it's essentially a few things, right? We had a night. By the way, sorry if you can subscribe, if you can share the video, it does wonders with the algorithms. We saw some news that affected the whole sector, right? There was a very, very official Senate Banking Committee hearing on debanking, focusing on the sector. Those are a lot of good, smart, educated words, right? And we like that when they're talking about our sector, right? So there was some legal government things happening. And we actually saw the very, very lovely ACB earnings, right? So I think with those two, it was nice to get the sector excitement. everything kind of gapped up. I say kind of because these ones actually didn't, right? But we saw that nice jump. We saw good candles, very high wicks. And really, I would say SNDL is a little bit like the CGC chart more than it is the TLRY chart, right? We definitely got a good wick up, but hey, at least we maintained a lot of body. At least we were actually able to hold more moving averages, right? If you watched it, I don't know if you did, CGC very nicely takes that one. You can actually say 2 because we were under the 8 as well, right? So CGC was able to take 2. TLRY, on the other hand, tries to take the second and doesn't, right? So when I'm looking at SNDL, I do see 2 nice moving averages taken. We were over the 8 yesterday, right? Tried for the third and then came back. So, to me, I'm looking for the same thing, right? Can we make our way up to basically 190? Hopefully we can even go higher, right? But I think going 190 first and then maybe 195, 196, and then hopefully we can go up there, right? Tranche, basically. Otherwise, I would be worried about us coming down to 181. Okay. Again, I think the general comment was, just in case you fast forwarded, when I looked at the breakdown. Oh, come on, right there. Sorry. This breakdown, feel free to pause it if you want to read the rest. Again, these are just educated thoughts and recaps from a single person. If you have a better recap, please share it with the team, right? But, I'm reading nothing fantastic. I'm reading nothing bad. But hey, if this was just a little better, and if ACB was just a bigger name, like look at the volume. There isn't that much volume before it, right? If this was just a little bit bigger a name, if that was just a little bit bigger of a headline, I think the whole sector could have done better. If CGC earnings can do well, I think that'll help SNDL do that tranche that I was just talking about, right? The exact same words and everything is echoed on MSOS. If CGC earnings can do well, I think that gets us over the 50. I think it helps us red to green, and maybe give us a real shot at almost 5. Right? I think if CGC earnings aren't going to be that good, it's going to reject this 50 and we're basically going to come back down to this 350. I think what is that actually at? 349, yeah, 350, right? So this didn't take as many moving averages. This is more of a traditional doji in my opinion, right? So and I think that makes sense a little bit. Where the others react a little bit more, I think an ETF might balance out, right? But I don't really know what the bigger holding earnings calendar looks like. Let me know, and maybe I can give a bigger detail on that. But yeah, overall, I think that's the big thought on those right there. I'll chapter us right here at 17, give or take. Let me know your thoughts. Let me know your opinions, even if you disagree. Let's go to ACB real quick. And again, I talked about it throughout all the other ones. I'll at least give it a little bit of love here. This was a big day right here. And I remember this earnings right here. What month was that? That August earnings like it was yesterday. This was a good earnings. Obviously, I'm just saying it as my own opinion. The market decided it wasn't good enough, right? But I remember really liking this August one. I really remember thinking we were going to break that 7 line, and clearly it did not, right? But hey, I don't remember this one, truth be told. If you do, let me know. It kind of seems like it wasn't a great one. But when 2 of the 3 last earnings, in my opinion, were decent to okay to good, that's nice. That's a solid start to improving, right? Because again, there are companies that are good at earnings, there are companies that are bad at earnings, and then there's the ones that are in between, right? Getting from bad to in between is a good start to making your way to consistent to less. Oh my god, like this comment from James earlier, right? Look, it's not bashing CGC. Where was it? I don't think that whatever, like where was it? I don't think that CGC earnings are gonna be good. I don't think it's bashing. I just think that there's been so much, ups and downs and good, or like as they start to get reactions that are better and more consistent, and 2 out of 3 is a good start to that, right? Let's get a good earnings next time. Let's get a couple other names going, but you get the point on this one, right? Big volume. Listen, I started the video with it. This was a 70x. This was a 68x if you want to be tech, right? Like that's a big jump. I don't want to fall back to 8 million or even lower, right? So I'm really, really hoping we can at least hold 40-ish million shares. That's still a pretty big drop, right? I'm still basically giving up 33%, give or take, right? But 7, 14, 21, 28, 35, 42. Let's use 6 million shares an hour. I use it with my fingers instead of the calculator. All right. We're looking for about 6 million shares in the first hour, 12 to 15 in the second hour, and I'll start to be a little comfortable. And again, those numbers are a drop to here, right? But again, I don't want to pump and dump. I at least want to pump and relatively hold. If we can get more than 10 million shares an hour, that will get us more than 70 million shares in a 7-hour day. That will give us more than today, right? And if we can get more, that's even better. I like that we're actually going up after hours. You know, I don't care too much, but hey, I at least see it. It really is all about that 200, right? If we can break 550, my next line is all the way up here at $6.13 for ACB, all right? Let me know your thoughts. Let me know your opinions, even if you disagree. Last one I want to do, this video went a little bit longer than I expected. Let's take a look at high tide real quick, all right? And I think there's just two big things that are jumping out at me. Number one, I think we all expected this 316 line to break a little bit sooner, better, harder, so many different words right there, right? I think the important thing to remember, because obviously I've been talking about this 254 line a lot, right? That's the line I made golden and this and that. But if you look at this 316 line, it's actually harder than the 254. Right? Where this 254 was attempted here, finally went, this line has not been even remotely touched till here, right? So we are battling difficult lines, right? So trust me, I know, and you know, normally I do my golden line at all-time highs, and maybe it was a little too cavalier of me to make this one golden. This 316 is also a tough line. It really, really is. And again, you can see we're talking about, you can't even call this a hit because that's just a straight hot knife through butter. The last real time we were playing around, battling with, was actually back in 2020. Look at that. December 2020, we were basically at that 316 line. You can see a little bit lower, right? So that is a long time ago, right? There was even a little bit more of a battle on that 254 right here as opposed to right there, right? So that's not an easy line. I know that one's the golden one, but hey, this one's a difficult one too, this one's a difficult one too, and that one is as well, right? So just kind of putting things back into perspective really quickly there, okay? I think the important thing here is obviously the earnings that we had right here. I don't know too much about the earnings, I will say that. I think the market reaction very quickly is down instead of up. I think what I like is we still held this line. I think that's a really interesting doji by that line as well. I think that's a nice little bounce up right there, but I use the word little bounce because we're still kind of dealing with that 8 MA more than I want, right? You hear me say it all the time. Good things happen over the line, bad things happen under it, and hey, right now we're just kind of stuck under it, right? So I like that bounce. I think as long as we're over that 254 line, excuse me, small hiccup right there. I would, on the technical side, you can say that 245 line roughly, that's at least over the 200. And, you know, I respect the moving averages more than my little drawings, right? But I think we're battling the 8. I think that's the biggest thing that I see. And again, I think more than anything, that is not an easy line. That was a real good attempt, but not the best of confirmation and goes, right? And yeah, just a couple other factors right there. Let me know your thoughts on earnings. Look, I don't care that that's a negative number, right? -4 cents, excuse me for that pause right there. -4 cents is actually a really good number if we were expecting -8. Right? Like that's actually significantly better than expected, right? I'm making up that 0.8, right? But I care less about this being a negative number. I care way more about what the expected number was, right? If we were expecting only a 0.2 2 loss, 0.02, excuse me, and we lost 0.04. Well, that's obviously worse, significantly worse than expected, right? So let me know if you know what the earnings per share expectations were. Otherwise, I'm sure Raj put a good tweet about, growth here, revenue growth there, stuff like that. Earnings per share is and forever will be what matters the most to me. All right. I think just the last thing on high tide. So I'm looking at the 50 moving average, the 50-day volume line, excuse me. I'm still seeing good. Look, it wasn't that long ago. We were all the way down here. All right. We had a good little spike stabilized here, good little spike stabilized here. Not really any other spikes since then. And I think it's fair to say that line is holding well, right? What tends to happen is a scary fall down when you only have one spike and not that many more. So I think overall, as long as we hold the golden line, as long as volume doesn't just suddenly fall back to that like 100 200k world, I think there is still more good than bad. I just think that we're dealing with some very difficult drawn lines that you can see have base from the best one, which is this one. It's basically 2 years, right, since we've touched it, 22 to 25. Wow, maybe even 3 years, right? This one being even worse than that one. So yeah, I think that's pretty solid. Let me know if you have better thoughts on the earnings. Otherwise, I think that's at least the technicals. I very, very much love this thing if we can get over 316, right? 316 puts us over all the moving averages, puts us over that bad resistance, and then you saw what my next line was. I don't want, let's do it. Let's not, because again, we talk about the up, we talk about the down. I'm here to be unbiased. If we lose 254, I would be worried that 220 is next. I think more importantly, if we lose that 254, we've lost all the moving averages and things could get scary, right? So let me know your thoughts. Let me know your opinions, even if you disagree. Oh, I appreciate you so much.